The stock market has been at an all-time high, Nvidia has been going to the moon, and AI-related stocks has been on a rocket ship. But should you be buying stocks at these levels? Here's what Tom Lee, co-founder of Fundstrat, which is a research company, had to say about the stock market.
My next guest says stocks have risen in June for the right reasons, softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like Nvidia, like we've rarely before seen? I mean, is the water still safe?
You know, I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
For those of you who doesn't know who Tom Lee is, he was a chief equity strategist at JP Morgan Chase. He also called the stock market right 3 out of the last 4 years. So he definitely has some credibility. Now here's what he had to say about Nvidia.
So is Nvidia the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
You know, there's a lot of people trying to top tick Nvidia, you know, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if if we were discounting Nvidia being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell Nvidia and try to call a top, I actually think there's still a lot of upside.
When I hear anecdotes, like I heard at a fundraising thing the other night about how all the local kids own Nvidia, what should I think when I hear that kind of information?
Well, you know, makes sense. I mean, Nvidia is the largest stock, so I mean, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. I mean, everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, you know, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
I mean, to an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rates.
Let me know in the comment section if you guys are buying stocks right now or staying on the sidelines. Also, check the description down below for some free stocks with Mumu, who is a sponsor of the channel. If you deposit $100 to start investing with their brokerage account, they're going to give you up to 5 free stocks. And if you deposit $1,000, they're going to give you up to 15 free stocks. So check that out down below. Like and subscribe, and I'll see you guys in the next one. Thank you for your support.